Okay, welcome everyone to this evening's ACY Securities webinar. My name is Duncan Cooper. So tonight's webinar is Forex Trading Live Market Analysis. And coming up through the week, just to give you a heads up, tomorrow we have the webinar Identifying a Simple Trade Setup using a trendline break and following a written trading plan. That'll be all about trading around pivot points. And then on Thursday, we have more live market analysis. That's coming up at 7 p.m. Sydney time on Thursday. So that's what's coming up through the week. So before we get into tonight's webinar, if you can all read through the disclaimer, that would be great. If you're on our YouTube live stream, I cannot see the chat, but you're more welcome to join us in the webinar to ask questions. I've given you the link there, or you can just watch. For those in the webinar, I've got the chat open and the question and answer box open too, so you can just ask me anything you want. So everybody, please just read through the disclaimer. All right, we'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I am a full-time Forex trader. I've been trading the Forex market for more than 15 years and mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. Through the week, you can connect with me at our website, acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia, and you can connect with me on my handles there on Twitter or LinkedIn. And to grab our analysis firsthand, just register for our Telegram channel. If you want to get access, just contact Nathan.bray. His email is at the bottom of the screen, but I'll put it in the chat right now. So, well, if you want to maybe set up a demo account to trade and practice before going live, or you're ready to open up a live account, just contact Nathan. He can walk you through all those steps. So his details are in the chat. If you want to get access to my chart layouts and templates that you can see there on screen for MT4, then just contact Nathan. He will set you up. All right, let's get into the news events first of all for the coming few days. It's a very highly volatile market at the moment. Well, not right this minute, but it will be on Thursday. So a few events coming out over the next couple of days will make the market volatile. For the Aussie dollar, first of all, tomorrow morning, but let's just go through all the events. So Wednesday, getting into the midnight there, we've got the CB consumer confidence data coming out. Then 11:30 in the morning for the Aussie, got CPI, QQ, and year on year. So the market will be clearly watching that for the Aussie crosses. And they've got the trimmed CPI, QQ, expecting a dip down in inflation. But if that dips up rather than down, I'm sure the Aussie pairs will fly north, expecting next Tuesday week possibility of an interest rate rise. Okay, so getting to Thursday morning, we have the US FOMC statement, federal fund rate press conference at 4:30 then, following the 4 o'clock items, expecting a 25 basis point rise there. And then later in the day on Thursday, we have the Eurozone interest rate decision at 10:15, followed by the press conference at 10:45. So Thursday is going to be volatile early morning and late evening for us. For the dollar and then the euro, expecting 25 basis points on both of those currencies. So the market's probably going to be in a little bit of a holding pattern until we get past certainly the FOMC statement for most pairs. And I'm seeing that there's not a lot of commitment, but we'll get to the chart. So you just need to be very much aware that if you're trading at the moment, you know, be very much aware of these items. They're definitely going to affect the market. Nobody wants to be in a pair and get wrongly affected. It's fine if it goes your way, but who knows which way the market's going to go. So now be very careful with that in mind. Let's just get into the charts, and we'll start with the dollar index. So this is the week, this chart just I'm bringing up here. We're in a weekly downtrend. We move through supports, and then we're just moving back above at the moment. So we've moved down with a trend, and now potentially we're just having a corrective rally back up. And broken weekly support here, 101.89, lines up with the 62% fib of the dollar index there. So we could be just, from a weekly perspective, rallying back up. So the day chart here is showing you that rally. So over the next few days, as we get into the FOMC statement, do we come up to this level on the dollar index and start to hold and want to turn over? If we do, then we're probably going to see pairs to the US dollar moving up, pairs to the US dollar moving down, okay? And as long as the trend and structure holds its form, then, you know, we can probably forecast maybe that's what's going to happen. We're going to come up to broken supports, being resistance, 62% retracement there. And then are we heading down for the next leg down? All right, so we'll have to wait and see how things unfold. And S&P 500 here is not really yet having a pullback within this trend. Hasn't put in a new high, so I'm still anticipating we could be pulling back to day supports, 62% fib here. Could be putting a minor further high bottom in here to go higher. But if you were a trader here, logically, you'd be looking for a pullback to 62 and supports. Now, price might not give that, but you know, if you're looking for how the market usually unfolds and using technical analysis in that vein, then you'd be looking for that kind of pullback there. All right, but in a clear uptrend, all right, so I will just be, you know, if you want to get into the S&P 500 within the trend is up, looking for a pullback. And hi Azu and hi user. I hope you're both well. Got a few new names, I think, on my list tonight. So welcome everybody if you're new to the webinar. KC, undercover, hello to you too. All right, let's get into the charts. We'll start with maybe the pound crosses, pound dollar. Now, if you go to the weekly chart, this is just the inverse of seeing that corrective measure on the dollar index. There's a minor low here on the weekly chart, and we've had a 62% retracement, and that's easily seen on the day chart here. Okay, so we're at a possible level of support here on the fib. Now, when the news comes out from the FOMC statement on Thursday, we may pull back to 127.59 day support in between the 62 and the 79% level. And at the moment, it's just right at where we'd expect support to come in, just from a pure support and resistance point of view. All right, we've had 1 day below there, and we're 1 pip above it at the moment. So if we actually have a reversal day today and close above that weekly support level, this weekly high here, that could be the signal that we are moving back up now for the next weekly leg up. You know, are we now moving north? All right. Be nice to get a close first of all above this high, just to start to show a reversal. And for our chart here is still in a downtrend, so it'd be nice to see structure on the 4-hour chart turn to up, so you get some form of to a higher top, and then you see a pullback. In a perfect world, it'd be great if it pulled back to the weekly high, 128.48 to be support, to then move higher. All right, so most of these pairs I'm just monitoring at the moment. Structure is in retracement mode on the higher time frames. I'm just looking for a turnaround in line with the dominant trend. So not quite seeing that, but we may well see this start to turn upwards over the next couple of trading days. And the high time frame trend is clearly up. So this pullback, it's just a pullback measure at the moment in my mind. And I'm not interested in trading to the downside. I'm looking for this market just to turn around and start to show structure to the upside. All right. So trading is all about, we all want to just lob onto the charts and trade just jumps out of us right away, but looking for structure to start to confirm the uptrend. Edwin. So you've got long Edwin on the pound on a 1 hour, is it a 1 hour trend line break? Not sure we've had a 4 hour trend line break. 4 hour to me, there's no trend line break on the 4 hour, so it must be a lower time frame that you've gotten in. 30-minute trend line break. Okay. All right. Yeah. I'm guessing you may have gotten in through here. Kind of affair. Broken trend line became support. Just want to drop to the 1 hour chart. I mean, this 1 hour chart is definitely an uptrend at the moment. If you wanted to trade the pullback just within a 1 hour range, just drop that to the 50-minute chart. So there's the 1 hour range at the moment. You could be looking for dip to the 62 or the 79% level, stop below the low, looking to get long. The only thing I don't like about that at the moment is I really like, you know, if I'm going to get long on this pair, I'd like it to be getting long above 128.48. It moving below 128.48 means that the level I'm looking for to be support is breaking back to possibly being resistance. So I would much prefer to see 128.48 to start to be support for the market rather than it having a deeper pullback. You know, if you're getting long, say here, you have to ask the market to break above this level once more. All right, so it'd be a lot nicer for it just to start to form a base above at and above 128.48, but I don't know if price is quite doing that yet. So it's just a question of being patient. A good level is down here at 128, where we've got the 62% level. So I would entertain, we stabbed down there yesterday and held. I would entertain down here if we came down there today and held, because then trading up close to 128, you've got lots of room to manage your trade ahead of 128.48 in case it fails there. All right, so that would be a good area to look for if we do trade down to that level today. All right, pound yen, I put this out on Telegram today. It is forming an uptrend now in the day chart. I did say be cautious around this 180.41 level. Could be support around here last week. Now on the day chart, we have a higher top, higher bottom scenario. It's still very much range bound. This 180.41 level is from your monthly chart. It's this monthly low here that we're above. It's becoming support now for the market. So I'll just be looking for a dip down, back down to test 180.41. Whether or not the market can offer that, I don't know. If you move to your 4 hour chart, and if you've got my charts, you'll have the low of last week and high of last week here, the red lines. And the 79% lines up nicely with monthly supports. And there's a 4 hour top here and 4 hour lows to the left there. So supports at 180.41 area there with a 79% fib down there too. If we were to move down into that area, that could be a very good buying area on a setup, whatever your setup is to trade back up. All right. Now, whether or not we can get down there, the price has been moving up a little bit through today, so it may not want to get down there. And that's fine. If it doesn't want to get down there, that's fine. But that is the most opportune area. All right. And also what will happen is there's an imbalance here on that candle. Go to your 50-minute chart. Here's the imbalance. And let me just squash this in a bit. Well, most of the imbalance actually got filled yesterday here. Came down and filled this. So maybe it can't get down. We'll just have to wait and see. So I'm watching this area down here. And I'm just going to monitor to see if it can get down there. If it doesn't, I won't probably be doing anything, but that's fine. I'm always looking for the best levels that the market could present. All right, so down there 180.41 down to 180.30. Also, the projected low comes in there today. So if it does get down there today, by the time price gets down there, it will be stretched. And then there's a high probability it will at least pull back up from the area, making life easier for you to manage your trade to break even in the short term. All right, let's get into the euro dollar. So euro dollar has been selling off. We're actually having 2 weeks down here. A couple of, we can't hold above the monthly top, 110.95. There's a weekly area of support here at 110.12. That looks very ominous that prices may be moving down towards that level. And the weekly range, 62 level lines up nicely, 1002. So that would be a very good level to watch for. Don't forget where the longer term trend is, it is up. All right, so whilst we're drifting down, I'm just sitting ready for these optimum areas for turnaround. So this level here, it's actually last month's high and a weekly high, and the 62% fibs just underneath there. Now, you know, I won't be up when the FMC goes off, but after that, when I wake up in the morning, I'm certainly hoping that price may be at and around the 110 level, because that could be a very good support level. All right. Now, if you want to trade to the downside, the 110.95 monthly level, I know we're below that level, 40 pips away, but you can see we broke below it yesterday and became resistance twice. So it could come back up to 110.95 and once more hold, as long as it hasn't gotten down to this level down here. Then you could look to this level to be a seller's level, up to 111 to trade down. But I won't be looking to trade down from that level if it's already traded down to this level, because this is the buyer's level. Once this buyer's level has been hit, and if we get a turnaround, then I would anticipate this level will be broken to the upside. All right, so a couple of areas to watch. You could look to the downside from up here. If price was to rally today, we do have the US news coming out at midnight, so that may pop things back up. And we've got the central pivot point there too. So if we were to spring back up, there may be a selling option to trade down to our support area from around about the central pivot point, which is 110.89 and 110.95, the monthly high. Okay. Euro yen. Now it's not really behaving for me. I was wanting this to move above 156.68 and then start to hold, but it's not doing it. So the day chart here, I could even go to the weekly chart. We've had a weekly pullback of 2 weeks, and then we had a week up last week. Now, I'm anticipating, we are seeing some yen weakness coming in, and we may well be moving above the weekly high here. At the moment, of course, we're pulling back inside the range of last week. Now, I was just looking to the range of Friday's low, but we are not able to hold above 156.68 at the moment. I was hoping that would become support today, but it's not doing it. So I was monitoring this range today. That's Friday's big candle. Now this may just hold at 156.11, the 79% fib of that range. That would be the first fib range I'd monitor, as we are further potentially pulling back at the moment and not holding above 156.68. The other range to monitor would be last week's range. All right. And what I can see here, there's all these 4-hour tops to the left. All right, which we're into at the moment, but I'd much prefer just maybe to focus on the two lower areas. So let's put a line in across these two tops, 156.12.8. All right, now what I'm noticing of the weekly range, we have a 62% level, I think it's a 156.07 just here. And then the 79% level at 156.11. And your 4-hour support there. It's all through the area there. So that would be potentially a very good level of support. And you got the figure just below. So this whole area here, 156. The figure, so 156.12 down to 156.00. Could be strong support there. I would watch that area for support. All right. Just leave it on the 4-hour chart there. But I'll go down to the 15 because we can come back to that later in the day. If that's to come down here, you start to see a trend line break to the upside. Just need to make sure you manage your trade to break even by 156.68 because potentially that can be resistance and not move above. All right, we've tried to move above today. When I put out in Telegram this morning, I was hoping for a nice impulsive move up and this to become support. But you can clearly see here the central pivot point just became resistance and sellers have come back in. So the buyers are not coming in yet to prop this up and 156.68 to be support at the moment. So looking down there, 156.12 down to 156.00. So all the euro pairs are moving down in the London session at the moment. The euro pound, I believe, is moving down too. So last week we had a very impulsive move up. We're just trading back inside that candle at the moment. Notably, as we go to the day chart, this weekly high here, 86.58, was rejected 3 times. And I was hoping it would get back above 86.36, but you can see the high of the day was held at 86.36 and we're moving down. So if we just monitor the range of last week, 2 4-hour charts, there's a lower last week. There's the high. If we're just going to trade within the range of last week, the 79% fib level is at 85.90. And then you've got daily support coming in. Just want to check that is daily support. Yep. So this area here, 85.90 to 85.84 would be the area we would watch. This is where we broke above resistance on the day chart last week on the 4-hour. See, it came down and got support, came down and got support. So that was where all the support came in for that very impulsive move up. So I would anticipate support's going to be maybe coming in the same area. So looking in 85.90 down to 85.84 for support at the moment. Can we keep the overall trend? Even though this is pulling back, this is corrective. Weekly trend is now up after that very impulsive week up last week. So we're just going to trade back inside last week's range, deep down into last week's range, hold for the next move up. Okay, Aussie yen. Now on the weekend, I said watch 95.15 to be support. It was support yesterday. We dipped below yesterday, back above. Today's low is pretty much coming at 95.15. We're actually testing now this high over here, which is quite an area of resistance. But what hopefully you can see with my support and resistance indicator showing the major highs and lows, you can see we're forming another higher bottom on weekly supports. We are now heading up to challenge the last weekly high that we formed. It's not in a great area to be a buyer right this minute because you're going to have to trade straight into this weekly top. So that's not ideal. All right. Now through the week though, I don't know what the CPI data will bring. The CPI data might make this drop, may make it move up, may, you know, destroy anything that you're kind of planning in terms of a trade. But at the moment, as we're at resistance, I'd like to see this break above resistance and resistance become support. So I'll just be waiting to see, you know, can we get a little bit of an impulsive move up? Can we have a fib range that would maybe create, you know, something like so that you can have a 62% level overlapping too? But that would mean price would have to get way up, so that's probably not going to work. But it'd be nice if we showed a clear break above that weekly high and then started to show you intraday that we want to use that level to be support. Because at the moment, or pretty much at the level, so, you know, buying into the level is not a bright idea. But looking for a break above and then a pullback. So just wait to see what the CPI data brings, and then we can wait and see what happens. I mean, what we might find is that support over today and yesterday has been coming in at around about the 95.15 to 95 level. Move to the 15-minute chart. You know, if we do dip down tomorrow, let's assume that we're up here come when the CPI data comes out, if we dip down to 95.12, which is day support, you've also got 9,500 here as well, the figure. All right. You can see we tried to move below that level yesterday, and that's where the buyers came in. So anywhere underneath 95 with the buyers were clearly there yesterday. So that would be the area that I would watch tomorrow if we can get a very friendly dip. Trend is up, day trend is up, weekly trend is up. So look for the dip. Don't get caught trying to buy at the top. All right. News may bring you a very good opportunity to buy the dip tomorrow. All right, Aussie dollar. Very range bound. If I just do a little bit of drawing, this is actually in some form of weekly range at the moment, potentially. Okay, that's weekly support, weekly resistance at the top. Now, whether we get down to the bottom of the range, we have the CPI data coming out, we have the FMC data coming out. The levels I will be watching at the moment, if we get a significant move to the downside, is look at 65.95, 6,600 level for support. Okay, at the moment, it would seem, from the weekly chart perspective, there's your weekly top of the range. This is the bottom of the range at the moment. It is theoretically in range, but we potentially as well are maybe getting a fib pullback of that range. Just been just short of 62 level and day support. 62 levels at 67.11, 67.05 day support. There's another support level at 62. So tomorrow, this is the first area of support. If we were to get a dip down, watch 62 to be support. We get a massive collapse, watch 66 to be support. And through the FMC statement, if we do get a nasty sell-off over the next 24 to 36 hours, watch down here for support. Now the 4-hour structure here is turned up already, so support's most definitely coming in at your just ahead of the 62% level and 67.05 there. So if you're gaming enough, you could just monitor a pullback on the 4-hour range now, whenever that starts to happen, I will be dragging my fib and monitoring the 4-hour range too now to look for a retracement within that. In terms of structure, this is maybe at the top of a move to then have a retracement to a 62 or a 79% level of the 4-hour range. If that was to come down here, that would form another higher bottom potentially. We have a higher bottom, looking for another higher bottom to continue that move up. Be very aware of 68.05. That's a very difficult level for this pair at the moment on the upside. All right, so of course we're having to wait for the CPI data to come out, but potentially the market may just start to unfold structure like I was just showing you. So I'll just monitor it to see how the 4-hour pullback goes there. All right, cover the euro pairs and the pound pairs. New Zealand yen at the moment is not the best pair. It's in some form of triangular pattern on the daily here, although we may be just breaking north out of it. See the kind of triangular formation here. Over the last few days, it has been getting support on this weekly high here. Let's go to the weekly chart. So this overall trend on the weekly is a higher bottom potentially forming here. This week and late last week started to get support on that top. But the reason why it's struggling is of all these highs to the left, sellers are selling on these tops. That's why it's struggling to move up and through. So it's a difficult pair to trade at the moment. And that's fine. If a pair is difficult, you can just look to something else. But if you just look at the trend structure though, overall, the weekly trend here is quite clearly up. This is potentially another higher bottom forming. Maybe it's long-term move, going to move up to test this high. This is a higher bottom in line with that higher bottom forming on the weekly chart. And the level of support that is holding is 87.30. So any dips down to 87.30 should be watched for potential support to move higher. All right, but of course you don't want to be trying to trade anywhere close to that weekly high at 88.16, which I think as well is a monthly high. Yeah, we've got two monthly highs here that, you know, very prominent. Traders potentially selling at these levels. All right. So that high as well. All right, so just in a difficult area, but you can monitor the 15-minute chart. If you see price, you can see yesterday, as once we got above 87.30, became support here. So I will just simply watch 87.30. Does it offer you one of those friendly opportunities where it just dips down, starts to hold 87.30, you see you're set up to buy. Trend is up, general terms on the weekly chart, and a higher bottom forming on the daily chart. So it's just a question of, does it offer something that's appealing? It's not the best pair at the moment. And KC, I'm just reading your question. All right, I'm reading your question. I would just get you to contact Nathan. I put his email in the chat there. You should be able to get set up without, I don't want to broadcast what you've said, but I can, you know what you said, and I've read what you've said. I don't believe that that's quite true. I think as long as you've got an account, you should be okay. All right, to get the quick start set up. So I'll just re-put in Nathan's details here and send him an email. He's been away. He's only got back to work today. He's been on a long weekend since the quick start webinar last week. So just contact Nathan. I'm sure he'll sort you out. Okay. All right. Moving on to New Zealand dollar. So New Zealand dollar, let's just go on the weekly chart here. Again, another pair that's rather range bound. And we are heading towards August. And quite often August, you know, when the summer of the Northern Hemisphere and people go on holidays, and we can get rather range bound. So a number of these pairs are not holding their weekly gains and then pulling back. So we are quite seeing, you know, a rather range bound market. Weekly chart here, whilst we move to a new high here against this double top, we've been pulling back, but you know, from the weekly perspective here, there's a 62% retracement kind of affair going on here. All right, getting some form of support here at 62. We're back above this daily high here at 6,200. So clear level is 6,200 at the moment on this pair. If we are going to start to move up within that retracement for a further leg up, you know, so we've pulled back to the 62% level area. Are we going to be moving up now to test the high towards the 127 extension as another leg unfolds? We really need to start to see 62 become the base of support. So that's what you should be watching over the next few days. Very minor uptrend forming here on the 4-hour chart at the moment. You can see as well the difficulty for this to move up in the short term with the news event coming out on Thursday is there's an area here which was an order block of sorts, but the height of that order block before we broke out could be resistance in the short term. So if I just draw that in, and you can see that overlaps with this area here. So this price came down for support on top of that block, broke below, it became some form of resistances to move down, and we're a little bit short of it today. So this may not want to move above that area until the FOMC statement comes out. So, you know, if you want to do something on this pair, I would be looking at 6,200 for support. Try to get into a trade maybe to the long side as tight as you can to 62 to see if it will break north. All right. The dominant trend, whilst it is range bound a little bit, the weekly trend is clearly up. We've just had a weekly pullback to the obvious 62% area of the range. So this could well be where, you know, where we start to accumulate orders to move high. We might see another area like this form in this area over the coming couple of days while we wait for the FOMC statement coming out. All right. So be mindful what could start to happen here. We could go sideways, slightly sitting above 62. So 62 area could be the area to watch for support to come in. Can you see you're set up to buy on top of 62? Slav, yes, the New Zealand dollar could be pulled either way tomorrow when the Aussie CPI data comes out. You're quite right. And you know what could happen tomorrow? If let's say the CPI data is poor and the Aussie drops, this could just drop down. Let's assume that's the high that forms today, just for the purpose of explanation. You know, we might see like a 79% retracement back down to last week's low. And then you might see then this area being the support area to get long for another, you know, price might react down, hold, and then start to drift back up. All right, so that would be a good area to watch too. All right, let's get into dollar CAD. This is in a horrible area at the moment. It's right in between day support and weekly resistance. Consolidation as we wait for the SMC statement. All right, that's what the market is. You can't do anything about it, but quite clear the higher time frames here. The monthly trend is lower top, lower bottom. It's holding below monthly support. Monthly support is at 132.62. And we have a lower top, lower bottom quite clearly on the weekly here. High time frame trends are down, but of course here on the daily, it's in a little bit of consolidation. So with the trends being down, I said this last week, your area to watch for resistance is your weekly level of resistance at 132.23. That's low here. And your monthly low here. This whole area. Price can move into that area and out of that area to the downside. Yesterday's high could only get up to 132.23 and a couple of pips above. Friday's high held, Monday fraction above, and then we dropped. So that would be clearly the level to watch at the moment, 132.23. What happens if price gets up there? That's the sell zone just there. All right. At the moment, it's putting a little bit of bottom here. You know, this looks like this is support intraday at the moment. And then I would be watching up here. Bias would be to sell because the weekly and the monthly trends are down. Okay, even though the day is getting rather sideways here, and maybe the 4 hours getting support there, is high time frame trend is down. So look to structure something to the downside if you're at a level that you like. You can see once we broke below here, resistance, resistance, false break resistance, more resistance. So if we could actually refine it to the 4-hour chart here. That whole area, if you're looking for the wide area, but there's a slightly narrower area, the 4-hour tops here. All right, I'll just be watching the top of that range there. All right, so dollar franc, go to the monthly charts, broken below 2 monthly lows. They are 87.57 and 86.99. So that whole area potentially could be resistance as we're running back up to it. Monthly trend is quite clearly down there, and your weekly trend is quite clearly down now. Depending on what the market wants to do in this monthly area of resistance, we could actually come all the way back up to this area up here. This is where we broke down from. So we could move back to the point where we broke down from, but at the moment, we're a mile away from that area. So let's drop to the day chart. You know, at the moment, yesterday and today, we're holding at 86.99. So the 87 level is holding. That's a monthly broken low. Is broken support becoming resistance for the next move down? Now, at the moment, the 4-hour chart trend is still up, and this might be making a higher bottom here, potentially to move higher. But if we, in a perfect world, if this is holding, you would like to see a break of support, a nice rally back, 7% retracement, maybe a little head and shoulder pattern could form, and you see an opportunity to sell back down. All right, so at the moment, if this is break above 86.99, yes, it's moving up, but the trend is down. So, trading upwards at the moment is most definitely going against the grain of the overall trend. I would much rather just look for an opportunity to short if it presents. So watch this 86.99 to 87.57 area through the week. Does it start to hold? Does the 4-hour trend start to turn down? Or simply on a lower time frame like the 15-minute chart here, so this is very choppy here, you may just see this come up to 87 and hold, and then you can get a tight entry for, a tight trend line break entry to the downside. That would suffice. At the moment, early today, we obviously hit 86.99, and we've been below it ever since. Through London here, we're getting capped around about 86.95. So quite clear the sellers at the moment are actually sitting below 87 through London. So if that comes up to, 86.99, 787, and you see it reject, you see a trend line break, getting a tight entry with a tight stop, this could fail here ahead of the FMC at this level to trade down. So that would be an area to watch if you can get a tight entry. Or over the next few days, look for the 4-hour structure to change to the downside and look for an opportunity to sell a rally. All right, dollar yen. We of course have the Bank of Japan monetary policy statement coming out on Friday. So you need to bear that in mind. But we have had very good support come in on this weekly top here. I put that out last week on Telegram. Watching 137.90 to be support. And then further in the week, I put out another area to watch for support intraday to move up, which worked very well. So we actually have a structure here where we're potentially putting in another higher bottom on weekly supports. That's just a perfect example of weekly support getting tested on a pullback and offering a nice move up. So we have actually moved above this area of resistance last week, 140.44. That would be the perfect level to watch at the moment for support. See, yesterday we traded down, couldn't quite get there. So clearly the buyers are coming in just ahead of there at the moment, but watching that level through the week, 140.44 may offer a very good level of support. All right, at the moment, it's just between daily support and monthly resistance, just in the middle here. It's not ideal, but it would be ideal. If you got down to 140.44, then does it hold and start to turn around? Just dropping down to the 15-minute chart. It is getting some form of support here on the central pivot point, just turning into an uptrend there. So if you wanted a very tight entry, we're just again a swing point break to the upside. Just want to have a look at the 1-hour chart. 1-hour chart's a little bit sideways. If we can't, that's yesterday's low. But let's say today we do drift down more, but we can't take out yesterday's low. A good level will be down here at 141 to 140.93 in terms of possible intraday support if we're going to stay within the range of yesterday. So you can watch the area down there. That is turning slightly uptrend on the 15-minute chart, but I don't like the area. That's a better area if we can get down there. And an even better area would be the 140.44 level. If you look at the intraday price action when we broke above it on Friday, That's where the imbalance started up there. So potentially price is going to come down to fill this imbalance. Imbalance is there at the moment. All right. In fact, it's got filled. It's only to that low there. Now that's the imbalance area. What remains? So with that imbalance not being completely filled yet, I'll just squash it down. Then often price will fill the imbalance. So in a perfect world, I would be looking down there at the 140.44 level. But you can watch this level here too, because price might not want to get down there today. It may come down here and then pop back up. All right, let's have a look at gold, and then somebody wanted me to look at the pound CAD. All right, so gold, just from the weekly perspective at the moment, was very bullish above this weekly top. However, wasn't that bullish by the end of the week. So, of course, possibly some people are getting out ahead of the FOMC statement, and we're just, pretty much just above that high at the moment. Now, you could be monitoring the range of last week. Just today chart here. This is still in a higher top, higher bottom formation. It's just holding its formation. And that formation is across last week's trading range from low to high. And we've been down to the 79% level. So the 79% level, now whether or not you can get back down there again, but the 79% level may be the buying level for the week to put in the low of the week to then move up to put in the high of the week. All right. Now we're already back above the weekly level of resistance at 1959, but it may give you a further dip, but that would be the area to watch, that 79% level there. There's also these this little 4 hour of consolidation before we broke north. These lows here to the left. You can see where price has been getting support across that area too. So this area around here, if price was to come back down into this area and you can see you're set up to buy, or maybe on a lower time frame, that could be where the low of the week comes in. I got a question coming in. Jack, you're asking which instrument is better for total beginner? FX, indices, shares, commodities, crypto. From a very less risk perspective, you would probably say shares. You're asking me FX, indices, shares, commodities, crypto. Crypto is probably the most dangerous in terms of risk. Shares would be the least risky, because if you're just buying pure shares, you're not using any leverage. All right. FX, you can trade it unleveraged if you want to, so that wouldn't be that risky. All right. So just have a chat with Nathan. He'll be able to help you out in terms of discussing with you. Well, if you're talking about practicing and learning on demo accounts, then, trading some forex like the euro as a current euro dollar, the Aussie dollar, the New Zealand dollar, those particular currency pairs aren't that volatile. I mean, the risk is always based on how much of a position you're taking relative to the amount of money in your account. So have a chat with Nathan. He'll be able to help you out and maybe set up a little bit of a process for you of getting started in the demo account. And he might be able to get you on board with a quick start setup that we've been rolling out to new clients as a starting base for a strategy. And he can have a discussion with you about which pairs maybe to focus on as a starting point. Okay. Great. All right. Let's have a look at the pound CAD. Somebody's asking me. Don't know if I've got the pound CAD already open. All right, so you're telling me the pound CAD analysis weekly might have false break in DXY. Not quite sure what you mean by that, but we'll go through the pound CAD. Having a bit of rejection up here, fraction short of monthly resistance there, 173.77. Now that monthly trend is up, but there's clear resistance there. And there was also a high there that I should put in, 68.46. All right, so that's the monthly high there that we're holding above, which could be support. We're having a weekly pullback around about 79% level. So we've just been short of the 79% level and monthly support. There's a weekly high here for support. So this looks very similar to the pound dollar in its structure. This most definitely looks like a very good area of support for potentially another leg up. Like so. All right, the 4-hour trend at the moment hasn't turned up from that area of support yet, but I can see here on the 4-hour chart, there's this kind of block of trading before we moved above, became support. That was just a perfect pullback to support before moving up. So this may still come back down to the area, but that area, this is quite clearly the area where support should come in at 168.46. So I would just be monitoring this at the moment, see what happens if price can come down here. We may have already put the bottom in. I've lost my fib. But we could come down to support and the 79% level just there. It's worth watching this through the week. This area here. Now, if the bottom's already come in, I don't know if it has or it hasn't yet, then what we should see is a structural change to the upside on the 4-hour chart, and then hopefully a correction, and then a higher bottom to come in. So I don't know what you were looking at there, Azu, but that's how I'm looking at it. KC, I'm going to talk about what we need to look for at every time frame because I don't know what I'm looking at. I would suggest have a conversation with Nathan. He can set you up with a quick start setup, and that will start to give you a starting point to look at what you should look for in different time frames. Or it actually gets you to focus on one time frame in conjunction with another time frame. So make contact with Nathan. That would be a starting point, and then as well, he has some webinar recordings that he can give you access to as well. All right. Slav, you want me to look at oil? I know it's been moving up. It's actually an uptrend, but it is, it is stuck between what we clearly say is I can get my right numbers in, 82,666. We're obviously on the very large scale in a large range here, but the weekly trend is turning up here within the range. Day trend is quite clearly up. So I'd look at, looking at this, it's looking like, if nothing really changes, it's probably coming into, it can stop anywhere from here, I would say, across there as a potential area of resistance. And then what, if it comes back into this area, what does it do? Does it hold and fail and move back down? That's how I'll be looking at oil at the moment. It's clearly a weekly uptrend, but in a broader range. So that broader range is quite clearly holding the market. So, it gets to the top of the range. What does it do? Does it hold? Can you see a reversal, trade back down, or does it break above? In the short term, if you're looking for a short-term thing, then it's broken above this high now. So does it come back to here to continue up? Okay, and I got another question coming in, Anthony. Let me just read. So you're asking me, do I know if the quick start system has been run through the backtesting software one of my colleagues runs? So I think you're talking about, Josh Millu and his just trying to think of the right word. They have the way that you can code a strategy. Not to my knowledge, no. But we haven't looked at coding it because it's really a quick start strategy for somebody that doesn't know anything and wants to have a starting point to trade. And it's not designed to be no strategy can be a perfect strategy. It's not designed to be a perfect strategy. It's designed to get you trading in line with the trends and have clear entry points, stop loss points. And then once you can start to see how the market does unfold from day to day, you can start to learn a bit more technical analysis and develop yourself as a trader. Now, from a standpoint of can it be traded as a standalone thing and does it work time and time again? Has it been back tested to see the results? No, it hasn't been back tested. It's based on trend theory, trading it in line with the high time frame trend, giving you clear entry point to stop loss points. It wouldn't be that hard to code though. Have a chat with Nathan. He might be able to get onto that. So it's really, an office in-house thing. I'm outside of the office, but if I have a chat with Nathan and say, is this something that could be coded for that? And if it can, then you could see how you could forward test it and back test it and see how you can build on the strategy in a very basic strategy at the moment. Okay. I mean, you could forward test it yourself. That's what I do with strategies. Is with the strategy as it is, have clear entry points, stop loss points, how much risk reward you're going to have for your target, and then trade it forward 20 goes, and then have a look at your first 20 trades and see how you're going. So if you want to do it manually, that's the way to go. And journal exactly what you're doing, and journal anything that you're seeing could be improved in the process of your 20 trades. That's how you start to forward test something, and also then review how things are working and what could be tweaked to improve the profitability. Because what you might find with any strategy, but we're talking about the quick start strategy, you may find that you need to trade a certain risk to reward over many trades to make the strategy work at its optimum. Like, for example, 1 to 3. Okay. I have seen some very nice setups on that strategy where it's achieved at least 1 to 3, if not 1 to 4 on a profit. So, taking profits too soon on certain strategies can be detrimental to its profitability too. So, at the end of the day, we're all traders individually. And to give us that warm, fuzzy feeling about, what we want to do as a trader and be able to trade consistently is often we have to do the hard work ourselves and make do the work so it proves to you yourself that you're comfortable with what you're doing with a strategy to be profitable long term. So I'd encourage you to do, as much work as you can yourself. Of course, if you don't have the time, yes, you could have some form of EA coded thing to help you trade a strategy for sure. And, if you can back test it, great. Or, get forward testing. I believe that you can, look back in time and have a look, see how it went. But I always feel like forward testing it live, even if it's just in a demo account or live in a live account with a very small amount as a trade size, like, one micro lot. You can take 20 trades, trade one micro lot. And if you're going to lose on that few trades, you're not going to lose much, because one micro lot's very small risk. So with that being said, that's the way I would do it. I would just trade a very small amount over 20 trades in a live account and practice to see how that strategy goes. If you start to see some good results, you can obviously up the lot size, but you do have to log the trades, review what's going on with whatever strategy you're trading to get the best outcome long term. Okay. All right, I'm going to wrap it up there. I've already told you what webinars are coming out this week, but we do have, I'm going to take you through a strategy trading around pivot points and trend line breaks with MACD tomorrow. I've been going through some of the components over the weeks, but we're going to pull that into a strategy. So trend line breaks, MACD cross, pivot points, that's the strategy tomorrow. I'm going to take you through at 7 p.m. More analysis on Thursday after the FOMC statement leading into the Eurozone interest rate decision. That's what's coming up from me. Thanks, everybody. Thanks for all the questions coming in. Thank you, Slav. Good night, everybody. Have a great week. Just be aware of all those high impacting news items. You've got the Aussie CPI dollar coming out tomorrow. And then early morning Thursday, we have the FOMC statement. Thanks, everybody.